What's up, everybody? We are in the middle of the spring market, which is traditionally the busiest time of the year for home buying and selling, and the stats are all over the place. When researching articles for this video, it became pretty obvious that every location is experiencing vastly different outcomes when it comes to the housing markets. Check out a few of these headlines. Market Insider: home prices have dropped the most in 11 years. CNBC reports home sales fell in April as buyers contended with high prices. The Washington Post: existing home sale prices fall at the sharpest annual pace in a decade. Redfin: fewer metros are seeing home price declines as lack of inventory keeps prices afloat. And then there's Zillow home value and sales forecast. May 2023 expectations for easing mortgage rates, tighter inventory have driven Zillow's home value forecast higher. And honestly, where I work in the DC area, prices are still going higher on houses that are priced well and show well. Every deal I'm in seems to be in multiple offers, regardless of how high the interest rates are. It's extremely frustrating for buyers who simply want to have the American dream of owning their own home. So today we'll go through all of those headlines and see what they are saying. And if you can't tell, I'm not really happy about the state of our housing market. It just seems like the affordability crisis is getting worse and worse, at least where I am in the DC area. But let's see what's happened in the rest of the country. Let's dive right in. Let's start with Market Insider. Home prices have dropped the most in 11 years, with soaring mortgage rates driving away would-be buyers. According to Market Insider, the median U.S. home price fell nearly 2% year over year in April, the sharpest drop since January of 2012, according to the data from the National Association of Realtors. They account for the reduction in home prices due to the increase in mortgage rates, with the average 30-year fixed rate climbing from 5.25% to 6.35% over the past year, according to the data from Freddie Mac. There's also a sharp drop in sales activity alongside the slump in home prices, with total completed transactions for existing homes falling 3.4% between March and April and over 23% year over year. They do acknowledge that the slowdown was mostly felt in the western half of our country because prices here in the east, well, they're still rising. But the bottom line is rates are up and home prices and sales are down. Moving on to CNBC. Home sales fell in April as buyers contended with high prices, fluctuating mortgage rates. Roughly half the country is experiencing price gains, said Lawrence Yun, the chief economist for the National Association of Realtors. Even in markets with lower prices, primarily the expensive West region, multiple offer situations have returned in the spring buying season following the calmer winter market. Distressed and forced property sales are virtually non-existent. This is really important because a lot of people were saying that we would get a lot more inventory from foreclosures and short sales like what happened back in 2009. So when Lawrence Yun says that distressed and forced sales are virtually non-existent, this is a very telling sign about the future of our housing market. They agree with Market Insider that home sales are down, but they do emphasize that there is still strong demand that is leading to different local and regional outcomes. The combination of job gains, limited inventory, and fluctuating mortgage rates over the last several months have created an environment of push-pull housing demand, Yoon noted. There were 1.04 million homes for sale at the end of April, an increase of 1% compared to April of last year. At the current sales pace, that represents a 2.9-month supply, which is still considered a seller's market. So the bottom line, home prices are up and sales are down. Moving on to the Washington Post. Existing home sale prices fall at the sharpest annual pace in a decade. In this article, they talk about how there are so much fewer houses for sale right now because it's pricier to buy a house, thanks to higher mortgage rates and still high prices, which haven't budged much. For months, this has generally led to a slowdown in the number of houses sold, but the prices for homes hasn't notched down in any significant way. But the April figures do show that home prices are finally starting to trend down, citing the same research by the NAR, the National Association of Realtors, that said that home prices fell by 1.7% in April. The key story is that in terms of sales, we're close to a bottom, said Gus Foucher, chief economist at PNC Financial Services Group. In terms of prices, there is still room to fall, and affordability is still a problem, particularly given the high mortgage rates. Foucher also added that the Federal Reserve, which has raised interest rates at the fastest pace in years, will see these home price declines as a sign that its efforts to control rising prices are paying off. And he said that he expects that falling home prices will lead to slower growth in the rental housing market. I think this certainly supports the idea that the Fed can take a pause in June and not raise the Fed funds rate, because they want to see how these effects work their way through the economy, and in particular on inflation, he said. The bottom line, prices are down, except for where I work apparently, and may go down even more. Redfin. Fewer metros are seeing home price declines as lack of inventory keeps prices afloat. They go on to say that U.S. home prices are down 2.7%, the smallest decline in over a month, and that home prices are dropping in fewer metros. That's because there is so little inventory hitting the market, with homeowners handcuffed to their houses because of low interest rates. On a local level, home prices are declining in 28 out of 50 of the most populous U.S. metros, down from a high of 32 metros at the end of April. The biggest price drops are in Austin, Texas, down 17.8% year over year, Oakland, California, down 16.3%, San Francisco, down 13.1%, Las Vegas, down 11.4%, and San Jose, California, down 9.6%. So basically, half of the most populous U.S. metros have seen prices go down. But I bet if you look more specifically, it's probably going to be like where I am, where it's literally house by house, neighborhood by neighborhood. Pending home sales are down 15% from a year earlier, but that's much smaller than the 24% decline in new listings. Pending home sales fell in all of the metros that Redfin analyzed. They declined the most in Seattle, down 33.4%, San Diego, down 31.2%, Portland, Oregon, down 28.9%, Sacramento, California, down 27.9%, and Milwaukee, Wisconsin, down 27.3%. And new listings declined also in every metro that Redfin analyzed. They fell the most in Seattle, down 42.9% year over year, San Diego, down 41.2%, Oakland, California, down 41.1%, Las Vegas, down 40.8%, and Anaheim, California, down 39.3%. This is because most would-be sellers have existing mortgages with less than 6%. So why would they sell their house to go buy another house with a much higher interest rate? It's really only if you're buying cash or you're going to rent that it makes sense. The total number of homes for sale has been dropping over the last couple of months, which goes against the typical seasonal trends, as we are in the spring market and home sales should be increasing. High mortgage rates continue to dictate the housing markets. Although a lot of home buyers have acclimated to rates in the 6% range, and many are finding ways to lower their monthly mortgage payments, like using a 2-to-1 buy-down, high rates are handcuffing potential sellers, said Redfin Deputy Chief Economist Taylor Marr. It's hard to imagine a flood of new listings until rates come down at least into the 5s. The silver lining of giving up a low rate is that hardly anyone else is doing the same thing. And that means that buyers who are hungry for new listings will bite, and they don't have much power to negotiate the price down. This is exactly what I'm seeing here in Montgomery County, Maryland and DC. The sellers are still calling the shots, and buyers are getting more and more more frustrated. Redfin does point out that U.S. homebuilder confidence rose for the 5th straight month in May, hitting its highest level in nearly a year. And permits for single-family homes rose to a 7-month high in April. So there is hope that home builders may provide some much-needed inventory. They also talk about how the housing markets are different in different parts of the country, but the agents in most metros are saying that home buyer demand does outpace supply. Even in Boise, Idaho, where most of the industry experts have said that home prices have declined a lot since the correction started, Redfin is reporting that homes that are put on the market there at more of an affordable price point are now selling in multiple offers and going for over list price. They gave examples of home prices listing at $400,000 and $650,000 in Boise. And in Fort Lauderdale, Florida, home prices are up 9% year over year, the highest price increase in any part of the country except Milwaukee. Sales prices increased the most in Milwaukee, up 9.2%, Fort Lauderdale, Florida, up 9%, New Brunswick, New Jersey, up 6.4%, Indianapolis, up 4.9%, and Newark, New Jersey, up 4.4%. The bottom line is half the countries are seeing prices go down, while the other half are seeing prices continue to go up. And like I said, I'll take it one step further. Houses in the same area can both have price reductions and sell in multiple offers with prices going way above the asking price. It's the wild, wild west.
I think we're looking at more than one fracas. Execution here, Wild West over there.
That Mexican brown dope.
And then we have Zillow. Zillow home value and sales forecast May of 2023. Expectations for easing mortgage rates and tighter inventory has driven Zillow's home value forecast higher. Zillow has recently revised their home value forecast to reflect that home values will grow 3.9% in 2023. This is a significant increase from last month's forecast. Monthly home value growth accelerated in April, roughly matching what would have been expected pre-pandemic for the second month in a row, helping drive Zillow's forecast higher. Zillow's long-term expectation for mortgage rates has been revised downward, which would improve affordability, especially for those first-time home buyers. As inventory remains a challenge in this market, home prices will experience upward pressure and affordability will remain a hurdle for buyers and sellers alike. Home builders are experiencing a renewed sense of confidence in the market given the lack of existing homes. So as spring turns to summer, hopefully the new construction market can step up and fill the gap in inventory, said Zillow senior economist Nicole Bachod. So bottom line, Zillow thinks home prices will continue to go up nationally due to a lack of inventory. And they also think that since home builder confidence is on the rise again, that home builders can start building more to hopefully offset the gap in inventory. So that's the headlines for today at the end of May of 2023. And as you can see, the housing markets are very different depending on where you live. So tell us what's happening where you live. Are you seeing price reductions and a lot of inventory? Or are you experiencing what I am here in the DC area, that good houses, meaning those houses that are priced well and show well, are still going in multiple offers way over asking, regardless of the interest rates? Let us know. Did you guys catch my video last week on the possible ramifications of the debt ceiling? If not, check it out. It's just pretty scary to think what could happen depending on some of the decisions that our federal government decides to do. Thanks for watching. I do appreciate it. Bye!